For our review for Chapter 6, which I think is one of the easiest chapters that we've had, where we're talking about cash, and we're talking about balancing the checkbook with our reconcilement. And you did several of those for homework. Not all of the forms look like the one that we have in our working papers. And the one on the test will not have the words deduct and add. You'll have to know what we have to add, what we have to subtract. But bottom line, we want to make sure that what the bank says we have and what we say we have, they have to equal. So we have outstanding checks. Those are checks that we have written that the bank has not processed yet. They haven't taken those from our checking account. We already have them here on the checkbook side, but we need to subtract them from the bank balance. We also could have service charges. As soon as the bank processes our statement, they're going to take those service charges out. We probably haven't subtracted those yet until we get the statement. So we need to subtract those from this side. We also could have deposits that haven't been processed yet. And what are those deposits called?
Deposits in transit.
Deposits in transit. They're someplace besides the bank. They could be in the vault. They could be in somebody's car. They could be in somebody's file cabinet. Maybe somebody forgot to make the deposit. It could be in the night deposit. It could be in the teller's window still. Maybe we just dropped it off and said we'll come back later, and in the meantime the statement already got processed. So there's a deposit that we have added here, but the bank doesn't have yet, so we've got to add it on this side. So we have a lot of back and forth that we have to do, adding and subtracting, to make those two numbers balance. And that's what we want to do when we reconcile. One of my students has created her own business. She doesn't have her degree yet. She's still working on her degree, but she reconciles bank statements for about 15 companies. And you think if you charge them a retainer, let's say $100 a month. Now that's cheaper than having someone come in every day and you pay them. They're having an outside person reconcile their bank statements. So it's different from the people that are writing the checks. It's different from the people that are looking at the bills to okay those checks to be written. It's an outside company reconciling bank statements. How long would it take you to reconcile somebody's bank statement? Let's say they've written 100 checks, and maybe they have 20 outstanding checks. Might take a little bit longer than it did for our homework, but she's making some money by reconciling those bank statements. Every business probably has at least 2 checking accounts, one for the payroll, because you don't want the payroll checks to be in with those regular checks that we're using to pay bills. And we'll talk about that in Chapter 7. So she could be reconciling bank statements, 2 of them for each company. If she charges $100 per month for each one of those, she's making a sizable income. And she hasn't finished her degree yet. So think about the opportunities that you could have once you get that marketable skills degree, or that level 1 certificate, or that 2-year degree in accounting technology. And you can already start. You can't say that you are an accounting business, but you are a bookkeeping firm. Okay? We're not an accountant. We wouldn't have our CPA with just the 2-year degree. Now, we used to be able to take the CPA exam with a 2-year degree, and my dad took had a 2-year degree from a business school, a long time ago. And back then, you could sit for the CPA with just a 2-year degree. And he did pass his CPA with a 2-year degree. Now you have to have the 4-year degree, probably the 5-year degree, and have some work experience to sit for that. So they've made it a little bit harder, but it's not something that you can't obtain if that's your goal. A couple of you have already told me that's what you're looking for. to sit for that CPA exam. I have someone in my QuickBooks certification class that is studying for the CPA exam. And sometimes when you're studying for that CPA exam, you can get hired in a firm and they will pay you to study for the test. Because they want you to pass that test. You have to have some work experience, you have to do that internship, but you are studying for the test while you're working for them. All right, so this was the bank reconciliation. Our accounts would be current just by looking at that, but we still have to make them current in the actual ledger. So we still have some transactions that we have to record in the journal, and this one was the note that was collected by the bank for us, and there was a service charge. We made up that account collections expense. If we didn't have that, where could we put it?
Miscellaneous expenses?
Miscellaneous would work. We also had another transaction. I think we forgot to write down that we used the debit card to buy equipment. And so we had to record that. And there was a miscellaneous expense with that. I can't remember what that miscellaneous expense was. Maybe it was just the service charge for the month. The bank service charge, it says. This was a compound entry, but you could make it individual entries if you wanted to. The service charge separate from where we forgot to record that debit transaction, that transaction with the debit card. I think I just made a note there that you could have a service charge expense. Remember, it's your business, so you could create that account. If you have several checking accounts and you're charging a lot with that service charge expense, I'd separate it instead of putting it all under miscellaneous. We want to keep track of those expenses. Those help us whenever we're doing our end of the year reports. And then the last thing was, I think we had a collection expense for a note. Or maybe that was just both of them. That's just all of the transactions, I'm sorry. That was just both of them. Again, you could separate those if you wanted to. They wouldn't have to be compound. And then to make our accounts current, we have to post. Right? They're current just on paper, but we have not actually made those ledger accounts current. The second part of Chapter 6 was where we created a petty cash account. And we did our demo problem with the auxiliary petty cash account, or record. And when we opened up the account, that's the only time that we use the petty cash account. When we establish, and I said, I kept using the word establish the petty cash, it's just when we start it up. Another word for starting it up was just establish. When we establish the petty cash, that's when we use that account. We don't use that account again unless we wanted to change that maybe to $150. Then we could do this same transaction for $25. On our chart of accounts, it will be cash and then petty cash right underneath it. It is available cash if we needed to use it. Remember, assets are listed by order of liquidity. As we use the petty cash money, and the key word was what on the transaction? Voucher. Voucher number 1, voucher number 2. And they gave us a problem where we had the general journal, and then we had the auxiliary petty cash record. And when we saw the word voucher, we knew it had to go in here. It doesn't get recorded in the journal until we replenish or fill that petty cash back up. So we're just going to keep track of it on the auxiliary petty cash. Let's see if I have one where it's finished. This was just the demo that we did the other day. Here's the completed auxiliary petty cash for the demo. Mine doesn't look like this, and I have the Sunshine Fund here at school. You could be in an Excel file. It doesn't have to look just like this. You could create your own. But we want to know how much we spent, how much is left, and how much we need to write the check for. Will it always balance? Could we be short or over? We could be. So that's when we're going to use that account that was short or over. We talked about that in chapter 6. Here's how we're going to replenish the petty cash. We just added up those columns, and we had a special column for postage expense, a special column for office supplies expense, and then we had a sundry column where we could put anything else. We might have advertising expense, and we have an account called advertising, but we didn't have a column for it. So we could have advertising expense here and then miscellaneous expense. So whatever vouchers we have in there, we just know we needed to write a check for $69 to put back into that account, the petty cash. We don't want to always keep it at the amount that we started with. And then we'll need to remember to post. We didn't post in the demo, but on your homework, if you had ledger pages, you needed to post. The book doesn't always give you ledger pages to practice that, because posting, I don't think you ever forget how to do that with the 5 steps. You're transferring the information from the journal to the ledger to make those accounts current. And we can do it over and over again, but it does take up time when we're doing our homework problems, and we kind of miss the point of the new concept that you're trying to master. So we don't always have to post. Anybody have questions? Julie, you said you had a question about chapter 6. Did I answer it?
It was just only the homework problem with the second one, so.
On replenishing it, or the journal entry, or what? Which one?
None of those. It's just the after column with the homework.
Wasn't it reconciling in the petty cash for
No.
6? It was something else?
Yeah. Yes.
All right. Anybody else have questions about 6? No? Okay. It was kind of an easy chapter, wasn't it? I think it was. Remember, when we're talking about cash, there's no way to track cash. We found $20. Someone told me the other day they found a $100 bill. Oh, it was Sarah, our secretary. She was shopping, and she said out in the parking lot there was a $100 bill. How do you even return that to anybody? You can't. So, you know, it's just,
Not that
I've
much.
never been that lucky.
I found
Now I have.
Turn it in, and usually the business after 30
Oh
days,
yeah,
if
will they call you
they-
if they take your name?
if the business goes after
They'll
30
keep
days,
it.
they'll be paying to come almost to HEB, she's the bookkeeper, so if somebody returns something, they'll hold it for 30 days, and if that person doesn't come, they'll say, if you wanted your contact information, and basically you get to keep
Oh, you get to keep it.
It's like
It's just really hard to track
Yeah.
cash like that. I know there was one day when I was going through the drive-in window at the bank, and whoever was in front of me forgot to take the tube out with their money in it. And I've been a teller before, so I know when you're out, I mean, sometimes you can lose your job over that. So I just pushed the send button, and I said, someone left this. You know, when I always told my high school students that, they would say, why didn't you just keep it? Well, the bank knows which transaction that was, and if that person comes back and says, I left the tube in the machine.
They got cameras.
Yeah, so, you know, you have to do the right thing, whether somebody's looking or not. Was it my money? I didn't look at it. I just pushed it back. And I thought, that teller, you know, probably just got saved their job. So, Anyway, if we don't have any questions, I'm going to turn this off.